So good afternoon, everyone, and thanks for joining this webinar titled Supporting SME Internationalization and the New Normal. This webinar is the 12th in a series of regional cooperation and integration policy open dialogues, where we are seeking to discuss some emerging issues on regional cooperation and integration with internal and external stakeholders. This particular webinar, as the name suggests, is focused around the issue of SMEs. SMEs are important in almost all Asian economies. Not only do they generate a substantial part of the GDP and of employment, but they also, in many countries, are responsible for a significant share of exports, both directly and also indirectly through their links with regional and global value chains. Uh, Before the COVID pandemic hit, there were significant expectations that SMEs would be able to drive the next round of integration in Asia and the Pacific. There were expectations that they would be able to use regional markets to grow, become more competitive, and not only would this deepen integration, but it would also make it more inclusive. Uh, but as we all know, COVID has hit the pandemic, has hit the SMEs particularly hard. Many are struggling even to survive. So in this context, from an RCI perspective, there are two questions that arise. First, what can we really expect from SMEs in the new normal? Can they still deliver on the expectations that we held from them? And secondly, if they can, then what should governments and the private sector collectively do to support them? So at this point, let me just introduce you to the chair of this session, Jeffrey Tan. Jeffrey is currently head Group Corporate Development and Group Technology at the YCH Group. He's also the covering CEO of Y3 Technologies, a leading supply chain management information technology and services company, which is affiliated to YCH Group. He brings along more than 18 years of experience in applying technology to drive business growth, digital innovation, operational experience in smart cities, ports, customs, logistics, trade facilitations, and supply chain management. He's a graduate from the National University of Singapore and also from INSEAD, where he was awarded the INSEAD certificate in global management. So who better than him to chair this session, which is about SMEs and about growth and logistics. So over to you, Jeffrey, for your introductory remarks. Thank you.
Thank you. Thank you, Ashish. Glad to be here for this webinar, and I see that there's quite a big number of sign up, and I see people turning up for the webinar. I'm very delighted. Good afternoon, everyone. My name is Jeffrey. I'm truly honored and excited to be here to deliver short opening remarks for this webinar under the invitation of Asia Development Bank, ADB. Before I begin, I think Asher has done a pretty good introduction about myself, but I just like to sort of reiterate that actually I earned my keep by working for Singapore's largest homegrown supply chain solution company and leading regional supply chain management partner to many world brands across Asia Pacific, the YCH Group itself, as I head up the corporate development and technologies, at the same time covering the management of our affiliated technology arm, Y3 Technologies, which is a leading supply chain management information technology service company. I have also engaged myself in volunteer roles in business associations and business councils, including chairing a digital commerce initiative for SMEs at the Singapore Manufacturing Federation. To level the playing field for SMEs, I also devote part of my time at the Singapore Standards Council under the Trade and Connectivity Standards Committee as part of the leadership team to develop and drive standards across trade, logistics, supply chain, and transportation sector. I also spend part of my time sharing my industrial knowledge at academia institutions like the National University of Singapore Institute of System Science as an adjunct faculty, and also mentoring startups as part of my hobby. A bit of a YCH Group. While YCH Group is a large local enterprise, family business and regional player today in Singapore and in the region, we started our humble beginning as a MSME, which sometimes we call micro SME, or SME in Singapore back in 1955, where the founder itself, which is also our current executive chairman's father, Mr. Yap Chui Hock, which initials as YCH, founded in 1955 by the late Mr. Yap Chui Hock himself, YCH began as a modest passenger transportation company. However, in the 1970s, the family business actually lost its main contract. With the need to diversify the business, Mr. Yap himself roped in his eldest son, which is YCH Group current chairman, Dr. Robert Yap, in 1977. This marks the start of the company's venture into the cargo transportation business, which subsequently grew to include extended supply chain and logistics service such as warehousing and freight management. Today, YCH is Singapore's largest homegrown supply chain solution company and a leading supply chain partner to many world brands of MNCs companies and Fortune 500 companies across Asia Pacific. It took the company 60 years under the leadership and entrepreneurial spirit of the second generation to grow the company from an SME to today's state where it has 5,000 employees across 16 countries, 100 locations, and handle an annual cargo volume worth USD 50 billion. Revolving the topic of how we can support SME internationalization in the new normal. In today's context, I believe across Asia Pacific, SMEs forms a very important part of the economy in terms of production and employment generation. In Singapore, for example, a leading economy in Asia, whether we realize it or not, SME plays a critical role in Singapore, and the livelihoods of many in Singapore actually depends on them. Making up 99% of the businesses in Singapore, SMEs employ 70% of the Singapore's workforce and contribute to nearly half of our GDP today. They are the businesses that actually kept Singapore going and contribute to the achievements of Singapore today. And this is why in 2015, DBS, the largest bank in Singapore and Southeast Asia in terms of total assets, and Singtel, which is Asia's leading telecommunication group based in Singapore, started the campaign called 99% SME. As SME make up 99% of the businesses in Singapore, the campaign aims to help local SMEs become stronger together and go digital. 99% SME is a national-wide movement to ready all of Singapore SMEs to discover and support themselves. This includes creating a marketplace for SMEs to take their business online and get more customers. However, SMEs normally will find it difficult to participate in the world economy even before the COVID-19 pandemic hits and has been devastated further by it right now. This is often due to the lack of funds and necessary resources to embark on an internationalization journey. It's often the questions of what comes first, the egg or the chicken itself. Revenue generations from new markets versus investments to kickstart a new market. This is where the dilemma actually lies. In my work at the business associations and councils like the Singapore Manufacturing Federation and the ASEAN Business Advisory Council, I have seen SMEs and micro SMEs naively trying to leverage on B2B and B2C e-commerce marketplaces and shared economy supply chain management platforms to embark on their internationalization journey with minimum resource invested. Little did they know that all this effort spent will eventually go down the drain as the marketplaces are flooded with millions of brands and products and services, and without spending any efforts and resources on marketing to promote your brand and your products will not surprise you in any revenue growth. And typically, most SMEs do not have a big marketing budget to promote their brands, products, or services overseas. So on the topic of how we can support SME internationalization in the new normal, I would like to leave all of you today with 3+1 focus areas. The first three areas, namely, is accelerated digitization. The second is understanding the consumer in the digital economy. The third, which is the most important part of it, is actually the smart infrastructure that is built into the entire ecosystem. For example, Singapore has started a Smart Nation initiative, which actually aims at building smart IT infrastructure across the entire country and island itself. Last but not least, the last focus area is really about adapting to the new normal of work. So let me begin. On the first point on accelerated digitization, the pandemic crisis has actually become an enlarged or enforced change for society to adapt to digital and contactless mechanism for business transaction between individual, companies, government, trade, remittance across cross-border, B2B, B2C, B2G, or G2G, whatever you call it, and significantly accelerate the shift to digital and fundamentally shake up the entire business landscape. The economic climate itself is going through a rapid and unprecedented digital transformation through the advent of Industry 4.0 with big data, automation, smart robotics, artificial intelligence, blockchain, changing the way business actually operate. Industry 4.0 involved the use of communications, digital technologies to automate processes, improve productivity, but however, too much emphasis may have been placed on technological aspect and not enough attention given to the business readiness to transform digitally. To be ready, business must have adequate domain understanding so that they can leverage the right technology to enable their operations, with its people having an agile mindset and being open to learning new skills and adopting new work processes, which will help them to work more efficiently in a way not to do not use technology for the sake of technology, and jumping onto the bandwagon blindly, but use technology as an enabler to really drive positive transformation in the business. The second, I believe, which is the most important part to me, is the understanding of the consumer in the digital economy. The digital economy has spurred a creative reinvention of consumer purchasing habits over the past few years. And to remain competitive, business must understand that it is necessary a question e-commerce versus traditional brick and mortar, but instead it is not about going back to the basics and understand the consumers, how they behave and will behave, and reach out to each one of them with customized experience that are tailor-made based on their unique buying behaviors and expectations of service. The pandemic also forced businesses to reach new heights in channel integration, diagnosing their omni-channel capabilities, and developing roadmap for their new situation as the outbreak pushes traditional offline business into the online region. Many of which now face a host of new questions as the economy starts to open with ordinary business services and local consumption returning to normality. With a substantial shift from offline to online, including a new breed of online shopping experience featuring multiple touchpoints for consumer, the pandemic has blocked plenty of traffic to already dominant comprehensive e-commerce platforms, and new or emerging or social or vertical ones, as well as to the online domains that have tend to get less online traffic, such as the official brands, websites, and mini apps. Businesses should see the availability of e-commerce and omni-channel technology as an opportunity for their business to remain competitive or risk being left behind in today's rapid evolving digital economy. And next, I would like to touch on the smart infrastructure portion. Given the foundation role of digital infrastructure has played in helping managing the current pandemic landscape, government and companies are more aware of the productivity and social economic benefits brought by a smart broadband communications cloud services. For example, how digital solutions has provided critical connectivity between global and local healthcare experts and medical professionals, allowing them to conduct online consultations for more effective diagnosis, treatment with faster identification and less spread of infection. Vertical industry transformation has accelerated digitalization, which in turn will require smart infrastructure development to cater to the high throughput, low latency, security, fast services provisioning scenario simultaneously. Countries like Singapore have already taken proactive steps to bolster their critical capacity and coverage as we look to accelerate adoption of new technologies like Internet of Things, IoT, cloud, AI, not only for future emergency readiness, but also for sustainable economic growth. In the logistic and supply chain industry where I serve, leveraging on physical infrastructure with digital capabilities can yield powerful results, allowing logistic players to move their cargo quickly, safely, and efficiently at a lower cost and maximum efficiency. Last but not least, but the most important of all at this era, which is adapting to the new normal of work. The COVID-19 pandemic has altered our perspective on what is critical and important in our line of work, and it requires a different management style versus co-located groups and workplace flexibility and trust in employees vital to their new working models, to their work models. A lack of this means company will not be successful. It also created an urgency and accelerated the digital transformation of business, whether adoption of public cloud software as a service, remote, or flexible working style, with them understanding that this is not going to be a one-time event. There is a greater need for digitized connectivity networks supported by smart IT infrastructure as businesses move into the era of Industry 4.0. As nations like the ASEAN region look to advocate smart nations initiative, promote sustainability programs, and cultivate a mindset of innovations while fostering seamless connectivity, deepen integration within and beyond the region. In a period where many staff must work from home, technology that permits digitization and automation of procurement will serve to minimize time-consuming activities in business operation. With the pandemic also exposing how dependent are we on the vulnerable nodes in the global supply chain, massive restructuring in production and sourcing will see shifts to be closer to end user as well as greater localization or regionalization of supply chain. Before I end my opening remarks today, I would like to take this opportunity to urge governments, both public and private sector, to really explore working closely together to help SMEs internationalize and globalize SMEs being more resilient. Following my opening remarks today, you will hear from Mr. Shige Hiro and Senior Economist, ERCD, and Mr. Paul Vanderberg, Senior Economist, ERCD, where they will share their perspective on what was there a old normal and is there a new normal for SME internationalization. Let me give a short introduction of our two presenters today. Mr. Shige is actually a senior economist in ADB. He supports ADB developing members countries in improving small and medium-sized enterprises, SME, access to finance through various technical assistance projects. His advisory and research expertise include policies issues in SME development, including inclusive finance and financial sector development, especially in developing Asia. Prior to joining ADB, he held several expert positions at the Japan Ministry of Finance, OECD in France, and JICA expert in Indonesia. He holds a PhD in international studies from Waseda University in Japan. Following Mr. Shige's presentation will be Mr. Paul's presentation. He's a senior economist at ADB in Manila. His interests includes industrialization, the middle income track, employment, small and medium-sized enterprises, tech startup, and skills training. He previously worked at ADB Institute in Tokyo and is a consultant with a number of years of experience with the International Labour Organization. He also taught at the University of Bristol, the International Management Institute at New Delhi, and recently at Thammasat University, Bangkok. He co-edited books include SMEs in Developing Asia, New Approaches to Overcome Market Failures, and Managing the Middle Income Transition, Challenges Facing the People's Republic of China. He receives a PhD in economics from School of Oriental and African Studies at the University of London. Following that will be an exciting panel moderated by Mr. Ashit himself that comprises of various experts that I'll leave Mr. Ashit to introduce the panelists shortly. But before that, I would like to also give a short introduction for Ashit himself. He's a principal economist with the Asia Development Bank, ADB. Prior to this, he was with the World Bank since 2004 and has worked extensively in South Asia and Southern Africa. His main interest is in issues related to private sector development, growth, and trade. He holds a doctorate in economics from University of Maryland, College Park, and a master's from Delhi School of Economics. So after the panel itself, with the remaining time left, we will actually summarize the discussion today, followed by short Q&A to address some of the key concerns that you might have regarding the topic today. I hope all of you are ready and excited for enriching and engaging experience to hear from our expert and panelists on their views on how to support SME internationalization in the new normal. Without further ado, let me invite Mr. Shige to deliver the first presentation for today. Thank you.
Okay,
Mr.
thank you,
Sigit.
Jeffrey. Thank you, Jeffrey. So just a moment. So I will install my PowerPoint material. So can you see my PowerPoint material?
Not
Hello,
yet,
everyone?
Shige.
Is it okay?
Not yet.
Okay, let's start. So good afternoon. So thank you very much for giving us this opportunity to talk about SME internationalization. So in developing Asian countries, promoting internationalization of SMEs through participation in global value chains is a very critical policy agenda to unlock new productivity and inclusive growth at the national level. So for instance, Thailand promotes specific industrial clusters as high potential production bases in automotive and parts, electronics, and digital industries, providing more global business opportunities for SMEs. So Malaysia has several support programs to promote SME internationalization, such as SME Go Global, a market development grant, and export training programs. So SMEs can expand their business and grow further by entering into global markets. But on the other hand, they are fragile entities, easily disrupted by external shocks, such as financial crisis, disasters, and forced changes in business environment, like one brought by COVID-19 pandemic. So in our presentation, we will take a quick look at the level of SMEs exposure to global businesses and discuss key findings from the rapid MSME surveys we conducted in April and May to assess COVID-19 impact on business, addressing MSMEs involved in global value chains. So we will discuss what government actions will be needed to minimize damage and maximize the opportunities and benefits from changing business environment under the so-called new normal after the pandemic. Okay. So this is the agenda we discussed today. So I discussed the first two items, and my colleague Paul Vandenberg discussed the policy implications on internationalized SMEs amid new normals. So as you see in the slide, so SMEs held only a small share of goods exports in APEC economies, so ranging from 0.3% to 4.3%, with this composition unchanged long time. So when looking at the Asian countries, so micro, small, and medium-sized enterprises contributed around 20% of countries' export value, on average in Indonesia, Malaysia, and Thailand. So during 2010 and 2018, the share has been largely stable, so at a compound annual contraction of only 0.05%. So India MSMEs have been relatively well exposed to international trade, so representing around 50% of total export value. The share has been also stable so during 2015 and 2018. So as mentioned, we conducted rapid MSME surveys in selected Asian countries in April and May. So this slide shows the profile of MSMEs surveyed in Thailand and Indonesia. As you see in the circles of this figure, okay, so only a small portion of SMEs surveyed were exposed to global markets. So around 30% of Thai MSMEs reported involved in global supply chains, and 5.5% for Indonesia, so more pronounced in medium-sized firms and also manufacturing. So this suggests most MSMEs operate within small domestic markets in relatively stable businesses like wholesale and retail trade. So MSME exporters surveyed so mostly export their goods and services to neighboring Asian countries, China, Japan, and Korea. Focusing on these MSMEs, I'd like to highlight the COVID-19 impact on their business, so from survey findings. Okay. So this slide shows the comparison between MSMEs involved in global value chains, or GVC, and non-GVC MSMEs on business environment during the pandemic in Thailand and Indonesia. So blue bars indicate GVC MSMEs and red bars for non-GVC MSMEs. So we refer to 15th of March as a reference date of the pandemic and defined MSMEs by using national definitions. As you see the circles in the figures, we saw MSMEs involved in global value chains faced sharp drop in demand, supply chain disruptions, and contract cancellations more seriously than non-GVC MSMEs, so soon after the outbreak and the quarantine measures implemented. So for monthly income, the larger number of MSMEs faced over 30% revenue decrease in March, but in April, larger number of MSMEs faced no revenue in Thailand and Indonesia. So due to the increased number of temporary closure of business in April. So as you see the blue arrows in the right-hand side, so this was more pronounced in global value chain MSMEs in Indonesia. Okay, for employment during the pandemic, around half or more GVC MSMEs had no change of employment in March and April. And as you see blue arrows, the level of reduced workers in GVC firms was lower than non-GVC firms. So MSMEs involved in global value chains tried keeping employees as compared with non-GVC MSMEs. So this slide shows the total wage payments to employees by MSMEs in Thailand and Indonesia. For MSMEs involved in global value chains, as you see the circles, the level of suspended wage payments to employees after the outbreak was lower than non-GVC MSMEs, and a relatively larger share of GVC firms reported no change of wage payments to employees. So this slide shows serious cash flow problems for all MSMEs during the pandemic. However, as you see the circles, so MSMEs involved in global value chains had relatively sufficient cash and savings to survive during the pandemic as compared with non-GVC MSMEs. So for funding conditions, most MSMEs faced much difficulty in raising sufficient working capital to survive during the pandemic. They highly relied on their own funds and borrowing from family, relatives, and friends to retain their business. So getting a credit from banks was still limited for most of MSMEs. However, as you see circles in the figures, global value chain MSMEs had relatively good access to bank credit and had funding support from business partners during the pandemic. So our survey also asked the main concerns and the obstacles that MSMEs will face if the pandemic continues over the months. So most MSMEs reported a lack of working capital, so as a top-ranked concern to retain business. Decline in domestic and foreign demand was second-ranked, but it was more serious in internationalized MSMEs. So if the pandemic lasts over the months from the time of the survey, most MSMEs considered seeking the deferred loan repayments. And Indonesia GVC MSMEs considered contract cancellation more seriously, and near half of Thai GVC MSMEs considered wage cuts of employees. Among 21 options of policy measures, we identified that most MSMEs strongly desired financial support measures from the government in Thailand and Indonesia, which was followed by subsidies, cash transfers, grants, and tax relief. In particular, internationalized MSMEs desired one-stop service windows for exporters and importers. So to sum up, ADB surveys revealed that the COVID-19 pandemic and associated quarantine measures immediately affected MSME business operations. MSMEs involved in global value chains faced a sharp drop in demand and supply chain disruptions more seriously than non-GVC firms. However, a COVID-19 impact on revenues, employment, and wage payments in global value chain MSMEs was relatively lighter than non-GVC MSMEs. Financial conditions in GVC MSMEs was somewhat better than non-GVC MSMEs, so partly backed by bank credit access and funding support from business partners. But these were not enough. So global value chain MSMEs concerns are focused on working capital shortage and declining demand on their products and services. So they are seeking financial assistance programs such as support for trade finance, trade insurance, and supply chain finance, as well as timely consultation on international trade, so from the government. So actually, so this is not ADB survey, so, but for additional information, this is the result of ITC, International Trade Center Business Survey, showing the similar result to our MSME surveys. Top two government support measures desired by MSMEs were financial assistance and tax relief. The ITC Business Survey also revealed that 60% of micro and small firms face difficulty in getting information and benefits from government assistance programs. So this suggests it is crucial to strengthen the dissemination of government support programs for effective outreach to target beneficiaries or MSMEs. And interestingly, ITC survey indicated that SMEs are more likely to explore customized solutions to cope with COVID-19 crisis. I think this is because business flexibility in SMEs will be much higher than large firms. So actually, that's summaries of our survey and also overviews of other institutions' survey. So now I hand over the discussion to Paul.
Okay, great, Shige. Thank you very much. I hope people can hear me. I think I've got my microphone on. Shige has provided some very interesting information from surveys that he's done, and I think it really highlights some of the issues that we want to talk about. I mean, in particular, just to draw out two of the things he noted, what were some of the big obstacles? And you saw with the GVC firms, the decline in demand, in particular foreign demand, as well as disruptions in value chains. So trying to get a handle on what's happening on SME internationalization, we're probably seeing, a fallback in some sense about in the process of internationalization, because supply chains have been disrupted, travel has been disrupted, international relations have been disrupted. That's not good, and it seems like we've taken a step backward for that. So I think that's the sort of the premise that we work on, and then the question is really what can be done for SMEs to try to stem that pushback and to keep going in the future. Next slide, please. What I just wanted to talk about first is thinking about the old normal and the new normal. And the way I think about it, and I break it up, and I know everyone doesn't do it this way. I think there's an old normal up to about January 2020, and I don't know if we can call it an old normal because, you know, in some ways things are never normal. There's a lot of processes going on like globalization, value chain development, and SME participation in those value chains. So whether it's normal or whether it's it was a dynamic normal, I'm not sure. Then we have COVID, and I like to call this the great COVID disruption. I don't call it a normal because I don't think the times we're in are normal, although some people disagree with me on this. Now, this has started, as everyone knows, from in about February, and we don't know how this huge disruption will go on. And in some ways, COVID is different from other economic disruptions that we've had, because often in the other cases we have one singular event, right? And then after that event, economies and enterprises try to move out of it. But in this case, we have an event, but the event just keeps going on because we haven't found a way to contain this virus anymore yet. So that disruption might last until the middle of next year, until we've got a trusted vaccine in place. That's going to mean a lot of disrupted and reduced global interaction, people, tourism, travel as well. But of course, also products, as Shige's information and survey results suggested. We may find in that period, as a result of those restrictions, new ways and a deepening of digital interaction. After that, that's when I think the new normal will kick in. Once the virus is contained, we'll try to get back to a normal. But the big question is that normal going to be different from the pre-COVID normal? And there's a good chance that it will be. And I'd just like, in the next slide, please, to think about four ways or four issues that are not so much the issues right now, but are the things that are happening right now which will change the way things happen after COVID is contained. Okay, so this to me, that's the new normal, and it's new because COVID had a shock to the system and made people realize things. And these are the four things. And again, it would be interesting to see whether some of our panelists agree with this, or whether they think there are other characteristics that might arise. The first one may be that having had a big shock, we might be a bit more shock prepared, or we may realize that we need to be more shock prepared because there could be another shock, right? And not really sure what that means for business and governments, but it could mean better financial buffers with the idea that we might be hitting another shock in the foreseeable future. The second one, and I think this is one that everyone talks about, is that digitization is likely to get deeper. It's deepening now because people can't move as much, so we're using digital means and digital platforms. And I think the idea is that as we deepen digital connections because of COVID, it's not that we're going to go back to the old normal after COVID is contained. We'll keep that increased digitization. Now, of course, we all realize that there's been a long trend of digitization. So it's a continuation of that trend, but probably a deepening of it because of the COVID shock. The third element is we might think or realize that the dangers to our economic system may come from not sort of traditional areas where we think about trade disruptions. We may think about wars. We may think about financial collapses and crises and so on. But we could think about health and a health shock as a possible other major disruptor. And I think that's what we're seeing today. I think what's really interesting is that I don't think many people saw this coming, but what's really interesting is that Bill Gates actually about 5 years ago made some comments saying that I think the next major problem with our global economy and global society will come from some kind of health problem. So maybe he saw it, but we didn't, and maybe we'll look for it more in the future. The fourth one is I think it's possible, along with being prepared for shocks, that businesses will realize that if disruptions happen, it's not about just absorbing those disruptions, but it's about trying to be agile, pivot, take advantage of the disruption, and see if they can benefit and shift their activity to keep operating in new niches and new markets. Next slide, please. Here's a couple of program things, and I know there's, governments are doing an awful lot of things right now to deal with COVID, but I think these are kind of interesting ones because they're ones that governments are doing now, which have bearing on SME internationalization. Okay, and we've drawn these from looking at a bit of a scan of what governments are doing around the region. So to start off, Singapore has a fortitude budget. I think it was its second major budget to deal with the COVID crisis, came out in May. And part of that, they're really encouraging business to adopt e-invoicing, e-payments, and e-commerce, again, trying to deepen that digitization now. And hopefully that will continue over into the new normal. In Hong Kong, they have a D-Biz program. This is particular to SMEs, trying to get them to adopt more IT solutions and providing them with assistance. I think that 300,000 Hong Kong dollars works out to about $40,000 to undertake projects completed in the next 6 months. So this is a very now program. Malaysia, they have the automation and digitization facility. Again, the idea is to try to support SMEs to automate processes, digitize operations, to improve productivity and efficiency. And in Indonesia, a very interesting effort, I guess. It's a virtual business matching event or events that they're organizing to try to get SMEs connected with other enterprises abroad so that they can interact and trade and so on. And that's being done on a virtual basis because, of course, meeting face to face like we always used to with the trade fairs and so on is less possible these days. I'm going to leave you with that. I'm just throwing those things out, and I'm really interested to see what our panelists, because I think they have more of a direct pulse of the business community and what's happening now. Thank you very much.
Thank you, Paul. So now we'll leave it to Ashish to take us to the panel.
Thank you, Jeffrey, and thank you, Paul and Shige, for a very interesting presentation. I think what comes out clearly is that usually the SMEs which are globalized are among the more productive of the SMEs in an economy that therefore tend to be more resilient. And even though they felt the shock much more deeply than the local, than the SMEs oriented towards the domestic market, they were somehow more resilient and managed to keep employment and wages stable for a longer time. It's also interesting that they did not ask for much from government except efficiency in government operations as far as trade is concerned. So I think it's really interesting. The survey presents us some interesting thoughts on what might be happening, and it's very, I mean, it's not clear how it will go, because on the one hand, these globalized SMEs were more affected, and it could go either way. It could be that in the aftermath, suddenly global and markets don't open as much as domestic markets go, and therefore these SMEs probably find it more difficult going. Or it could be the other way around, that local markets would tend to be so small that the only companies that would be able to grow successfully are the ones which are able to access regional markets. So I think it's always good to triangulate survey results with what people on the ground are feeling. And so we have a very good panel today with us. We have Jennifer Buckley, Madhurjya Datta, Anil Bharadwaj, and Nana Khorodse to help us discuss some of these. So just a brief introduction of our panelists. Jennifer Buckley is a senior managing director at CF, an impact investor, having joined after 20 years in private equity leadership roles focused on growing mid-sized businesses across Europe and Asia, as head of GE Capital's EMEA private equity business and as CIO of its Asian operations. Jennifer sits on CIAF's Global Investment Committee, and she's based out of Singapore, where she leads CIAF's Women Economic Empowerment Fund programs. Uh, Madhurjaya Datta is currently the director of the Trade and Investment Facilitation Department at the Mekong Institute for Cooperation and Development. He has over 23 years of experience in private sector development in South and Southeast Asian countries. His key areas of interest are SME development, trade, and investment facilitation. Anil Bharadwaj is the Secretary General of the Federation of Indian Micro, Small, and Medium Enterprises, one of the largest SME federations in India. His specializations include industrial and trade policy issues, improving the promotional and regulatory environment for SMEs, and negotiating market access issues for SMEs in multilateral and regional trade negotiations. Last but not the least, we have Nana Khorodze. She works in the ADB's Trade and Supply Chain Finance program. Nana is a career banker. Before joining ADB, she worked as the head of trade finance in TBC Bank in Georgia, where her main responsibilities were developing and managing trade and supply chain finance business and implementing the bank's long-term objectives, policies, and procedures. So thank you all for being here. As you can see, the panel has a long experience of working with SMEs. So I think it'll be really good to learn from their experience. So I think one thing that perhaps we can all agree is that supporting the SMEs during this pandemic will be critical to preserving productive capacity and employment, also exports, and maintaining a competitive market environment. But also, COVID has changed things quite a bit. So one issue that probably is worth discussing is just how have SMEs' own perceptions about internationalization changed, and how have government perceptions about what SMEs can deliver for development changed in the aftermath of this pandemic. So perhaps I could turn Anil, and you can tell us a little bit about what's happening in India. Just in the interest of time, may I request that you keep your answers relatively short so that we have some time left over for Q&A. Thank you. Over to you, Anil.
Me?
Yes, we can, Anil. Thank you. Hello? Anil, are you there? You're muted still.
Is it okay now?
Yes, perfect. Please go
Okay,
ahead.
I'm sorry. So what it says is, first of all, thank you very much for having me, and also an opportunity to listen to what other experts had said. And I look forward to this participation. Two seemingly divergent or contradictory themes are emerging during the COVID pandemic. GVCs are working on strategies to de-risk their supply chains by avoiding over-concentration in just a few places, as you know, leading to exploration of new options as supplier bases. And many countries who sense opportunity there in this upheaval are trying to attract these GVCs and regional value chains. This is one interesting aspect. The second is, on the other hand, that many countries are turning inward, erecting tariff and non-tariff walls to insulate domestic industry and save jobs. If you dig deeper though, these divergent themes are not mutually exclusive, and the same country may be turning insular for one sector and more open to another depending upon the perceived advantages. So there are opportunities I see in the sense that the old structures are giving way to the new ones, and it would require a combination of imagination and boldness to take full advantage of these tumultuous situations.
Hello, Anilji.
Yes, I'm done.
Oh, okay. Thank
Okay.
you. Okay, so that's very interesting. I think an interesting perspective on how things are shaping in India. Uh, Datta, can I ask you, how is the story in the GMS? I believe you've been interacting with SMEs on a regular basis. So please tell us what SMEs are thinking and what governments are thinking.
Thank you very much, and a very good afternoon to all of you. Well, there has been some changes in the perception among the SMEs and after the pandemic. And for the SMEs, the crisis has underlined the danger of depending too much on any one partner to source or supply of their goods and services. The situation has made more SMEs realize that it's not ideal to rely on one supplier or one country for certain products. Because as you know, in the Greater Mekong sub-region, most of the SMEs, they are mostly relying on the supplies from China. So this has really affected in their production related activities. And they have to need to diversify supply so that they are less dependent on one or two countries. So this is one perception which is emerging. It was also mentioned by Mr. Paul that the digitalization in the SMEs is picking up. Well, that is also being observed. Most of the SMEs are now looking forwards to make necessary changes to digitalize their services. And also some GMS governments are exploring how they can help their domestic firms to access markets, also to identify new supply sources and market for the goods. Recently, we have designed a project along with Korea International Corporation. We launched this project since 1st of August. This is a 3-year project basically to support women-led SMEs to access international market. So first we are targeting the Korean market. So it's a 3-year project. We are targeting initially 70 women-led enterprises, basically on specific products that Korea normally imports from other countries. So we are trying to build a Korea-Mekong collaboration. So this is one activity that we have started in consultation with the 4 Mekong countries, Cambodia, Laos, Myanmar, and Vietnam. The crisis had also necessitated the governments and the SMEs to adopt new ways of working and also adding new skill sets. Most of the countries in the Greater Mekong sub-region have already started programs to upskill and also reskill workers, more specifically in the garment sector. You might have already heard about that in Cambodia and also in Vietnam and also Myanmar. They are considering to improve new skill set for the workers. In Thailand and Vietnam, I have learned that they have also extended advice and training to SMEs on how to use e-commerce platforms and how to promote and describe their products or services much better. Earlier, if they were just posting, now they have not just Alibaba.com, they have Facebook Insights, YouTube, and all these, even social media platforms to connect the broader market. So this is happening. But at the same, I will come later, but at the same time, this is the market linkages we are talking about, but the goods commodity need to come physically. So logistic services and the support services need to be addressed much adequately. That is one of the concerns. Thank you.
Thanks. So I think a very interesting perspective from both Anil and Datta, that governments and SMEs seem to be hedging their bets. At this point, nobody is clear about whether it'll be foreign markets and foreign linkages that might work for a sector or the domestic market, but everybody is trying to do everything. Let me now turn to Jennifer, and I think Jennifer's perspective will be a different one, because as an impact investor that supports SMEs, especially women-led SMEs, and help them grow regionally, how has your perception about SME prospects changed? And what are you thinking as somebody who's actually investing in that growth? Over to you, Jennifer. Thanks.
Thanks for giving me the opportunity today to speak about the women entrepreneurs we're working with in the region. What I would say about the women entrepreneurs that are often forming businesses in the region because they see gaps within their economies in certain areas as they think about the next generation. So often these businesses are relating to the development of education, healthcare, and food, like sustainable foods. So what we've seen through the crisis is, coming back to Paul's point about shockproofing, I think it's reinforced their view that they really need to build their foundation in their own domestic markets. And so that's what we're focused on. And they've actually, in some ways, benefited from COVID, both in some of their business models. If you look at the businesses that were focused on online education to provide greater access to their populations in certain areas, particularly on the STEM side, or if you look at one of our entrepreneurs took a view that her country needed to lower the cost of healthcare services, and she needed to build out domestic manufacturing capacity for medical devices. And in fact, it was because of the fact she built that facility that she enabled surgeries to continue to happen in her country at a time when no foreign medical devices could actually be imported into the country because of restrictions. So I think generally what we're seeing is the entrepreneurs are focusing on what they can do in their domestic markets. With the women entrepreneurs, we're also looking a lot at how we can support local supply chains and women within those supply chains. So there's an emphasis there, and a belief that if the solid foundation can be built in their own market, then ultimately they will be in a better position to look at internationalizing in the future. When it comes to internationalization, the things that most concern them would be some of the other points the speakers have raised, which is around cost of logistics. It's ease of dealing with regulations in other markets, whether that's on more the administrative side with finance and accounting and general corporate services, or it's in the particular industries they're working in. And there are particularly aspects around being able to build the capabilities of professionals that are working in some of those industries where, in some of those sectors, particularly when you think about healthcare, they're not necessarily open at the moment to their ability to bring in knowledge from other markets.
Okay, thank you, Jennifer. So I think what you seem to be saying is that SMEs have been impacted differently, and perhaps the key, as the presentation also noted, one of the key aspects is agility. Right now, the domestic market is the one that's open. They're focusing on that, but they're using this as a potential launch pad for international markets as and when they could become open. So really, it's a slow, it's a change, a temporary blip, but probably not a strong deterrent from viewing regionalization. I hope I haven't put words into your mouth, Jennifer, but let me turn to Nana. Nana, now I think the TFP program of the ADB focuses on easing financial constraints on SMEs, both for trade finance and for supply chain financing. So from your perspective, what do you see as the potential for that you see from investing in SMEs? And has this really changed post-COVID? Over to you, Nana.
Hello, Ashish. Thank you for inviting me, for arranging this webinar. Greetings to all our participants. So in addition to your introduction, I would like to give you a little bit of background about our program. So the Trade and Supply Chain Finance program of ADB represents the private sector operations of ADB and provides loans and short-term guarantees to developing member countries of ADB through the local banking sector, taking risk either on banks or big corporates in support of domestic and international import-export, which is crucial for economic growth of countries. And of course, SMEs, they play a significant role in this cycle. So as we all know, SMEs have a critical role stimulating economic growth and jobs that improve living standards and lift people out of poverty. However, a significant market gap exists. ADB's Trade Finance Gap Survey, which is in line with global statistics, confirmed a global trade finance gap of $1.5 trillion gap in 2019, and that 40% of the gap is in Asia and the Pacific, and 74% is rejected on SMEs. So SMEs have difficulty accessing financing for various reasons. including banks focus on collateral while financing and thorough financial analysis based on standard documentation. These are not often available in emerging markets. And when we talk about women-owned firms, they even face more challenges. That's according to our gap study. We in ADB are trying to reduce this gap for SMEs through this trade and supply chain finance program, targeting SMEs operating in both domestic and cross-border supply chains with underlying transactions of up to 12 months and sometimes higher. So trade and supply chain finance program aims to reduce financing gaps for SMEs and support their growth by increasing private sector support for supply chain finance, first of all, improving cash flows for companies that will eventually lead to growth of jobs, and enabling companies traditionally not considered bankable to receive financing. And lastly, I guess the significant role of our program is demonstration effect that we bring to local markets, that we encourage other financial institutions to undertake more risk on SMEs and provide more trade finance. So having strong SMEs in developing member countries of ADB is critical. I can give you a short example. During this pandemic and in general, when the crisis happens, big corporates, big companies, they realize the importance of keeping their key supply chains alive for their own survival. Big companies themselves, they have easier access to financing during the crisis, and small suppliers may not have this privilege. And cancellation or delay of orders, they put small suppliers in very difficult position. Especially if their business is like relying on one or two key clients. So although big corporates, they manage to survive the crisis and they have access to financing, when the things are back to normal and everything is stable, and they are looking for the supply chain, they might not be able to find those suppliers because they are not there anymore. So therefore, it's crucial for us to support SMEs and to make them stronger, which will, of course, eventually lead to more domestic and international trade, and it means stronger economies. Thank you, Ashish.
Thanks, Anna. I think that ties in very well with the survey results that Shige and Paul found, which is that SMEs in GVCs tend to get financing from their partners to a larger extent than domestic firms. And it's really interesting that when the capacity of the larger firms to do this is limited, as during COVID, the ADB can step in and help them out. So turning back, one thing that we saw in the presentation is that that while all SMEs were impacted by the COVID, and in fact all enterprises were affected, the impact on globalized GVCs was significantly different from relative to those SMEs that were not part of GVCs. So Jennifer, if I could ask you, you've been tracking the companies that you've invested in quite closely. So how has the COVID-19 disruption affected them? And can you tell us a little bit about what actions have been by governments, financial institutions, other stakeholders have been most harmful for SMEs, and actions that have been particularly supportive? Over to you, Jennifer. Thanks.
Thanks. So from the perspective of the SMEs we're working with, when various countries went into lockdown, their ability to handle that shock was very, very much driven by the speed of the lockdown. So in some cases, it was so quick that those SMEs had no ability to prepare, even to get access to their books and records from their offices. So that's very much highlighted the need for SMEs to move into this digitized environment, to really look at cloud accounting services and support on the tax side, and also readily get information out to them on like different changes that were going on in the tax system. And then what the focus of the SMEs really was in the first 4 to 6 weeks as we were working with them was very much around working capital management. So the things that they needed to think about was, how do we make payroll, how do we cover our rent, and how do we deal with taxes, and then look at how do we more proactively collect our receivables and think about our suppliers. So a lot of that was around crisis management. So where they needed our help was thinking through each of those issues. Where the government programs were helpful were the tax deferrals. Having said that, though, they weren't tax waivers. So there's this kind of looming like a set of tax liabilities that will hit many of, I think, these SMEs going into the fourth quarter. Other aspects were around, as I said, they had the benefit. We worked with them very hard as far as what did they need to do to pivot their business model. We talked about aspects around digitization. I think the speed of digitization, things that we were expecting to happen in 5 years' time, have really happened in 6 months, because there's been an absolute necessity for SMEs to do that. And that's been around, payments. It's also been around, maybe ideas they had on online business models that they were going to think about in 2 years' time, and then they had to immediately implement them to survive. One of the aspects I think where governments were less supportive and the programs then would have been helpful for the SMEs we were dealing with is on this access to finance issue. These SMEs needed the support of some emergency finance to make it through the crisis. And a lot of the programs that were put in place were getting funneled through the traditional banking systems, which, as Nana mentioned, for us, women were already had issues regarding access to finance of those systems. So it really meant that the funding that was available, they weren't able to access. The issues around like transparency of records, that can be fixed with, these cloud accounting services we're trying to implement to make it easier for the banks to underwrite. There's, collateral needs to be thought of differently. But actually, when these SMEs don't have an existing relationship with the bank, actually putting emergency funding through the banking system isn't helping them get access to finance. So what we did on the SEEF side is we've created our own emergency loan finance facility. It's a global facility for women, and we're directly lending to those SMEs around the world. We're touching the iceberg, but the tip of the iceberg, but at least we are getting finance out directly to the SMEs that we know that need it, and also to supply chain financing businesses that we know are supporting women SMEs within their customer profile.
Thanks, Jennifer. So I think it's really interesting, the point that you make, that usually the channels that SMEs receive aid from may not be the ones that the government is necessarily using the most, and the ones that the government is using is conventional banking mechanisms, which don't really reach out very much to SMEs. Jennifer, I know that you have to leave in a couple of minutes, so maybe I'll just ask you if you have 2 or 3 things that you would like to suggest that governments and other stakeholders can do to help SMEs become more resilient and grow regionally?
Sure. I think on the resiliency side, what we're seeing that the SMEs need support on, and this is true of all SMEs, not just women SMEs, is around these business support mechanisms. What builds resiliency is having access, particularly to other entrepreneurs who can give them advice on how to put this foundation in place in their business to ensure that they can withstand these shocks. And generally, like when a crisis hits, and this was a very large one, they have that support of advisors and mentors around them so that they know what they should be doing day to day. We didn't see it so much in Southeast Asia because I think the entrepreneurs here are used to I guess are used to many events hitting them, both domestically and regionally. And some of our other markets, our teams were spending a week just trying to get the SMEs and entrepreneurs in a mode of stopping panicking and actually thinking about what do I need to do and coming up with an action plan. So I think definitely anything the governments can do around building out the business support services for the SMEs is helpful. And again, as I mentioned, like tackling the access to finance issues and thinking about how we can be looking at providing financing to SMEs in different forms would be helpful.
Okay, thank you very much, Jennifer. So maybe now I'll turn to Datta. Datta, you've been looking at SMEs across the GMS and discussing their problems with them. So what do you think has been particularly helpful or harmful, especially when it comes to globalized SMEs? Over to you, Datta. Yeah, okay, please go ahead then.
Yeah, about the harmful and the most useful, measures. Well, as we already listened to the presentation of ADB, it was very well mentioned that the SME sector, which are integrated, have been devastated, have been largely impacted. This is equally true. The results, we have noticed that there has been low demand and disruption in supply chain that has affected all the countries that are mostly integrated in the global value chain in the Mekong region. And the COVID-19 impact on the SME operations vary along the supply chain. We noticed that upstream SMEs, which are affected in terms of labor shortages, and while the downstream SMEs are facing more serious challenges related to supply chain and also consumer demand. And however, these disruptions are diverse in terms of the sectors in which the SME operate in the GVC. We have noticed that most in electronics, chemicals, and plastic sector, SME import almost 60% of total inputs. And while the automotive sector, they import nearly 40%. So these are some differences that we notice in the trade channels. And also the garment sector has been largely hit by this crisis. And the nation's wide lockdown, as well as border closing, as well as the international flight stoppages, all that has led to major disruptions in the activity. And the most hit part is the tourism sector and tourism-related services. This is one of the area. And some countries, they have introduced measures that are meant to incentivize SMEs to adopt information and communication, which has been found to be quite helpful to improve their resilience against the economic downturns, and also to help them diversify their value chain partners. As Mekong Institute, we have developed the GMS business database that supports the business-to-business development among the SMEs. And we have nearly 3,000 SMEs registered on this platform. In this regard, let me inform that we have also created a GMS logistic business database. Paul also mentioned about that online matching, which is being conducted in Malaysia. We have also done similar program. And we have nearly 1,500 logistic operators, and we have developed a smartphone application system for having B2B networking among the logistic partners. So this is quite helpful. And next month, we are organizing the GMS Logistic Forum 2020, which we will have nearly 150 logistic companies physically for the B2B and the business seminar. And we will open up for the ASEAN logistic and transport operators. We target nearly 500. So this is kind of a B2B platform that we are doing. I think this kind of work is basically helping the business contacts and also to understand the partners and to force business alliances. Thank you.
So Datta, if I can, two things that Jennifer thought that were very important for SMEs. One was access to business services, especially at a time when such major changes happening in such a compressed time frame. And the other is improving access to finance. What do you think are 2 or 3 things that you would recommend to governments to do to support SMEs in this time?
My first suggestion would be to strengthen the regional value chain. We have seen how the GVC might not work and things are getting more localized or regional basis. So this is one area that the governments as well as the regional organizations need to focus and strengthen the RVCs. These should be the priority in terms of reducing vulnerability and also to foster SME integration in trade and investment. For your information, we have also developed the Economic Zone online database system in the GMS that allows strengthening sub-regional value chain across different products. In the GMS, including China, we have nearly 3,000 economic zones. In Mekong itself, we have around 565. So this is a database that we have created to support company to company and also investor to company business context for the expansion and growth. So this online platform gives the user information related trade and investment with a single access efficiency. And we are also trying to connect with the one window system of each country as a further upgradation of this. I think that kind of initiative to strengthen the value chain within the region could enhance the cooperation and as well as to promote SME internalization within the region per se. And that will also increase our intra-trade within the ASEAN, which has been quite low. So we have large market is growing. So our SMEs can also look into the possibility of accessing the regional market in ASEAN as well. Second part is, I think, is important that a lot of initiatives are being taken up by the government, and but Paul in his I think Mr. Sihiro mentioned in this presentation about the access to information about the government benefits. I think efforts should be made to ensure that new programs are clearly communicated. Many SMEs may be unaware of the support measures made available to them, particularly when the new schemes are rolled out and quickly, and businesses are struggling to fight this economic shock. Providing clear information online to reach targeted beneficiaries would be important. Another point that I would suggest, as we all know about the NTM non-tariff measures, that is, I think, may also be a serious matter now because most SMEs will find it difficult on this different compliance, or that it is on certification standards and regulations that may exert more influence in the cross-border trade. So organizations like us, ADB, and other business support organizations, regulatory bodies must collaborate to harmonize their efforts to assist SMEs and ensure a better business environment. Thank you.
Thank you. So very interesting. While Jennifer focused on the interventions at the SME level, what you're suggesting is that perhaps for SMEs, especially in ASEAN and in the smaller economies of ASEAN, regionalism, open regionalism might be the best way to help them grow. Let me turn now to Anilji. Anilji, as Shige mentioned, Indian SMEs, especially in some sectors like gems and jewelry, are very heavily exposed to international trade. But unlike the GMS and ASEAN, open regionalism, I mean, India has not joined RCEP yet. So probably that's not an option. So maybe I can ask you, what has been the experience in India, and what are 2 or 3 things that you can suggest to governments and to other stakeholders to help SMEs become more resilient? Over to you, Anilji.
Okay. Am I audible?
Yes, you are.
Well, first of all, as you might be aware, that India observed one of the most stringent lockdowns in the world in the initial stages of the pandemic itself. So it impacted both domestic and exports-oriented businesses, though in varying degrees. And the domestic front, especially if we divide the MSME sector into 3 segments, then one that were government suppliers, and there are quite a significant number of MSMEs that are government suppliers in India, because 25% of the central government purchases are earmarked for the MSMEs. Second, that are part of the organized supply chains in India, including auto, electrical, engineering, packaged food, etc. And third are 80% of the MSMEs are the manufacturer to retailer segment, basically. So they manufacture and they supply to different sizes of retailers within the vicinity where they would be selling their stuff. And this is the 80% of MSMEs who have suffered tremendously because retails were completely shut down for almost 2 months. Now, when we come to exports, the impact again varied. A few sectors did pretty well actually during this period, particularly the pharmaceutical and medical supplies, packaged food. But India's major export basket comprising of textile and apparels, gems and jewelry, auto components, leather, all of them contracted. But the good news is, surprisingly, that the exports are bouncing back faster than the domestic market. So I think there lies the silver lining. Maybe if not here, so maybe some other different parts of the world, the life is coming to normal, and exporters have been fined to sell their stuff there. Now, on what government can do, I think there are several steps that government can take to make the MSMEs more resilient, especially with the shocks like that of this COVID pandemic. First of all, I think by setting aside a specific public procurement target for SMEs. In US, for example, it goes as high as 33% in few states. And it offers three very important things. One, it provides additional buffer from external shocks for a significant number of SMEs. Secondly, it induces greater competition and innovation in public procurement, as the small players cannot rig the purchases as usually the large corporations can. And third, and more importantly, it builds capacities of domestic industry, which can grow out of public procurement and serve more lucrative international markets later. The second thing that government can do is the government may reduce the capex of SMEs. Fixed cost of using infrastructure, both hard and soft, by providing these services like plug and play infrastructure, by pay as you use, SaaS model for services, to reduce their baggage so that they can meander through crisis with least pain. It is akin to reducing the excess weight, and it would make MSMEs more nimble. And thirdly, by providing SMEs access to factoring, bill discounting to improve their cash flows. These three things could be done very easily. It's not much difficulty, but that would make MSMEs more resilient to bear the shocks like this. I would like to add a couple of more things, particularly with regards to the regional integration. I think there is a need to encourage regional RVCs and perhaps need to expand the neighborhood concept also, that not necessarily the countries with whom we are sharing the borders, but I think we have to expand the concept of the neighborhood in a little larger geography. And that might also require harmonization of tariff and non-tariff measures if we are interested for RVCs to really functional. Thirdly, the regional studies are also needed, which explore potential of different countries within the region so that they can, in specific value chains, can build these RVCs and compete the GVCs also. These are a few thoughts that I had.
Thank you, Anilji. So very interesting. Again, what you're suggesting is that exports are bounding back faster, and perhaps one strategy for India to support SMEs could be helping India move closer to markets, maybe in ASEAN or other neighboring areas, as you were suggesting.
I agree.
And Nana, let me ask you, one of the things that Anilji pointed out was also this importance of access to finance. And I think, I mean, when we talk about SMEs that are into exporting, trade finance and supply chain finance are going to be critical issues. So just from your vantage point, as somebody who invests in the financial intermediaries who are then investing or lending onto the SMEs, what have you seen the financial institutions do which has been good or not so good? And how is the ADB helping financial intermediaries support SMEs better? Over to you, Nana.
Thank you, Ashish. Happy to share our experience. It was quite an experience, really, handling all these challenges. So in beginning 2020, usage of our program was down with 40%, I guess, compared to same period of 2019 due to trade tensions. And after pandemic, we have experienced a significant pickup in demand for our guarantee and short-term loans. And this is driven with the fact that the perception of risk increased on markets. And when the crisis happens and the risks are higher, of course, demand for the ADB support is higher. So the level of increased risk may be different between markets, but the change in demand we saw all across the markets we cover. So, as I mentioned, our program supports trades through banks, and during this period, general approach of banks to risk-taking was more conservative. For instance, we started dealing with transactions which in normal times would not need ADBs, we call it cover, ADB guarantee at all. Some of our partners would be able to facilitate transactions only with 100% cover of ADB guarantee. We also saw a decrease of supply of US dollar liquidity on markets. And in response to that, some of the partner banks started using their revolving lines with ADB more and more. So we have experienced this demand, and to address the impact of the COVID-19, ADB announced support of $20 billion back in 800 million for supporting trade and supply chain finance program on developing member countries. This additional capacity helped us to increase support, and we provided like around $400 million value was supported for COVID-19 related goods like test kits, medical equipment, and others. So during the same period, deals involving direct funding rose by 89% as well, compared to the same period of the last year. So with this rate, we are expecting to support around $5.5 billion worth transactions in a full year of 2020. Signed loan agreement with our partner banks in Georgia, Vietnam, Mongolia, Uzbekistan to address the liquidity crunch, and we provided first ever Euro trade loan in Georgia. So aside from the financial support that we faced need for, we also saw the gap in certain, information that we felt was lacking between trade finance players. We were one of the initiators of weekly calls by International Chamber of Commerce involving banks from across the globe that enabled financial institutions firsthand to take more rational decisions, especially during the first 2 months. We have calls and shared weekly updates with our partners about performance of our countries too. We also initiated weekly calls among trade finance programs of other MDBs to better coordinate on our response to pandemic. So we believe this helped international stakeholders to act in harmonized manner to go through these challenging times together. The lack of information we also faced and felt in terms of the products and companies that are directly fighting against the virus. And to address this, we developed an interactive supply chain map of key COVID-19 products. The map is available on our website, and it's free of charge. Anyone can use it. So mapping these supply chains means that if help is needed, banks, investors, governments, whoever is looking for the data can quickly access and find the needed goods and producing companies across the globe. And we keep updating and adding new products and functionalities to this map. I think the last point that I would mention here is the technical assistance that we have been providing throughout this period. When we are talking about building supply chain finance programs in our developing member countries, we are facing lots of challenges operationally because the level of knowledge and experience is quite low. That's why we decided to provide a very deep dive technical assistance to our local banks in order to build like proper supply chain finance programs. Currently, we are providing such technical assistance to Bank of Georgia in Georgia, and we will provide such deep dive assistance more and more to our developing member countries. Eventually, when the programs are properly up and running, we will step in and we will provide financial and support to our DMC banks. So it's not directly related, but I would also mention other technical assistances that we provide currently. These are for online trainings of trade finance and supply chain, AML compliance. We promote gender mainstreaming, building environmental and social programs, enhancing risk management capabilities, and others. So these are the key areas, I guess, that we had to focus on during this pandemic, and we continue doing that. And hopefully this could address some of the issues for our markets. Thank you, Ashish.
Thank you, Nana. So I think what our panelists seem to be suggesting is that the impacts on SMEs have been diverse, both positive in some cases, in some sectors, but also negative. And then to help them build resilience, a multifaceted approach is required at the firm level, both to build up their capacity for digitization and for undertaking the multiple necessary changes that are required to operate in the new normal. On the financial sector, to help the financial institutions adjust to the new normal and build up their capacity to accept the risk while not keeping SMEs out of the market. And finally, on the part of the governments to maintain their efforts to open up regional markets, because that's going to be a critical support for SMEs when they start growing. So with that, I'll turn over back to Jeffrey. And if you have any questions and answers, please write in the chat box, and Jeffrey will be happy to. Jeffrey, over to you for the Q&A. Thank you.
Yeah. I think before the Q&A, shall we do the group photo so that you still have everybody? Yeah.
Sure.
Yeah.
So
let's turn on our camera. I think everybody just turn on your camera. And
can I ask all panelists to yeah, mine is on.
Okay, I'll be taking the picture. 1, 2, 3. Another one. 1, 2, 3. Thank you.
Thank you. Okay. So let's have everybody type in their questions in the chat group, that has been created. I think Ashit has sent a message there. I think it's been a great afternoon and discussion on how to support SMEs going internationalized, as part of this webinar's objective. There are too many to be summarized. I guess we show good numbers in the region, especially concentrating on India, China, ASEAN, and the various forms of support that SME can get in this region has been well summarized by each speakers and panelists. So I'm mindful of time. As the webinar gets longer, you start to lose your audience, which is a norm. And I would like to just ask if anybody has any questions, please type it in right now, because I'm not seeing any questions yet. But I believe Ashit has some preset questions that he might have, to round it off first before we get the Q&A going. Ashit, do you have any questions for our presenters and panelists? Any further questions?
Nothing from my side, Jeffrey, but let's see if somebody has questions. Otherwise,
that's not a question, I guess. What's coming through is not a question.
Ashish, I do not have. I just want a clarification from Nana. You have mentioned about the online trainings that you have. Is it open for any participants? I mean, is there any language concern? Is it in English? Can you please repeat?
Yes, it's available in English, and it's available for our developing member countries. So and we provide it to banks, to our partner banks. So for not anyone can apply.
Okay.
But financial institutions from our developing member countries, they can apply, of course, and they have it free of charge.
Thank you. Thank you.
Thank you.
May I ask a question from Anilji at this point? Anilji, you mentioned about neighborhood markets, and I'm just curious to ask, what do you mean by neighboring markets, and how does this tie in with India's entry or non-entry into the RCEP?
The contention that I had in my mind is that, for example, we share borders with Bangladesh, Nepal, Bhutan, Pakistan, etc. So, I mean, maybe we could enhance or expand this concept of neighborhood, not only just Bangladesh, but Bangladesh shares border with Burma, or we share border with Burma, and Burma shares border with Thailand. So why not India, Thailand too? That kind of a thing. So that, the regional means not necessarily just the neighbor, but neighborhood in a bit of a more expanded form. The reason why I'm saying is the South Asia, by and large, we offer the same type of strength. We have the same type of strengths and weaknesses in many sectors. So we end up competing all the time, and GVCs or regional value chains couldn't be formed. But if we expand this neighborhood, then suddenly we find that there are a lot of complementarities that could be built, and the actual concept of regional value chains could take off.
Thank you. Any other questions that we don't have any more coming from the audience yet? If there are no questions, I think we can end the session for now. But I believe the speakers and the panelists are still always available to address any concerns that you have regarding this topic. That's all for now. I'd like to thank our presenter, our two presenters, Shige and Paul, and Ashid and our panelists. And we wish everybody good health. And we hope to see a vaccine soon and this pandemic over, and and the SMEs can now have a better shot at internationalization moving forward. So thank you, everybody. Ashid, you have any parting words for us? If not, I think that's it. Thank you.
That's it. Thank you very much.
To all of you.
Thank you.
Thank you. We look forward to seeing you in other webinars. Thank you very much. Goodbye. Goodbye.
Goodbye.
Thank you.